in market, we do see a stock that is in focus today, and that is Cohance Lifesciences on the back of its Q1 numbers. In fact, if you look at the numbers, we do see a decline coming in on the net profit, a decline of 35% to 48 crores is where it stands at for the June quarter. Sales, however, saw a rise of 12.5% at 549 crores. But now we're joined by the management, Vivek Sharma, who's the executive chairman of Cohance Lifesciences, to weigh in on the Q1 numbers. Hi, thank you so much for joining us, Mr. Sharma. Mr. Sharma, firstly, there is a dip in the profit, like I mentioned, on a year-on-year basis. And you did guide that in Q1 of FY26, that could be a muted quarter due to the shipment scheduling and customer inventory adjustments. What are the factors that were at play?
Few things. One is overall, except for destocking, if we take the destocking out on the CDMO business, all three segments of our business have actually had a very healthy growth. So we saw some destocking in the CDMO business. And if we take the destocking out, we have actually grown about 30% compared to last year. Our specialty Chem business has grown 28% and API has grown 19% compared to last year. We are also investing for growth, as committed to investors before that we have aspirations to become $1 billion business by 2030. And in line of that, we've been investing in people, processes, as well as, our capacities. And some of those factors are contributing to a short-term, dip in the margin. But overall, we are committed to the guidance that we have given.
All right. Hi, Mr. Sharma. This is Kanishka also joining in. I just wanted to talk about some segments. Now, the specialty chemical CDMO business that has seen a sharp rebound in Q4. Now, with the Vizag dedicated site coming up, can you quantify how much of FY26 to 27 growth will be driven by the new capacity versus demand recovery?
So we don't give specific business information, to the investors. However, we are seeing, significant traction from customers, a commitment to a long-term plan. We've added new customers in that segment, and we're really excited about the potential that we see in that space. And then we continue to grow. We have made some changes in the team. We've been investing a lot of time with customers. I've personally been visiting customers in US, Europe, as well as in Asia, and looking forward to a very healthy growth in this segment.
And well, Mr. Sharma, in Q4 of FY25, you had highlighted the commercialization of a new molecule supplying 4 intermediates and a robust phase 3 pipeline. How much incremental revenue contribution do you expect from these in FY26, and how is the RFQ pipeline trending now versus last quarter?
So yes, we did talk about that, a molecule has gone commercial with 4 projects. And in addition to that, one of our customers got approval for one more new product just a few days ago. So now instead of one product, 4 projects, it's 2 products and 6 projects that will go commercial later on this year. So we are excited. Again, we don't quantify specific customer in details, but we expect, 6 different projects to go commercial later on this year. So that's good. In addition to this, we've also added a new commercial customer product with a Japanese innovator that is in tech transfer mode, and that will start to get commercial, volumes later this year or early next year. So we are excited about the commercialization of the existing molecules as well as the new customer we have added. RFP pipeline is strengthening. We are seeing EU plus and China plus strategies actually panning out. We have active discussions going on with several customers to advance stage discussions with 2 large global innovators, one with multiple RFPs, one with a very specific commercial product transfer RFP. So overall, we are seeing healthy trends in that direction.
All right, Mr. Sharma, given the, speaking of products, given the planned launch of 5 new products in FY26 in API and formulations, by when do you expect to return to, consistent double-digit growth in this particular segment?
So, listen, some of the CDMO business, as you know, is slightly lumpy, right? It depends on the customer demands, destocking and all of that. But we expect, that we will maintain, I think, long-term guidance is $1 billion by 2030. We are committed to it. Pipeline is healthy. We are investing capital in expanding our capacities, in some places capabilities as well. We announced 2 of the major investments this morning. And overall, listen, we remain very optimistic about meeting our long-term goals.
Right, Mr. Sharma, with the NJ Bio and Sapla integration weighing on FY26 EBITDA margins, what specific operational or cost synergies do you expect to realize, and by when can margins revert to mid 30% levels?
So listen, the investment in these businesses was not for cost synergies. It was to acquire capabilities that really position us as a niche technology CDMO. And those technologies are really playing out well, and we are investing capital in both those businesses. As you saw in the announcement, in oligo, based on customer demand and moving up the value chain, we are adding a site in Hyderabad that will be our GMP site. And we are talking to customers, to really bring in products for that site, right? So that is as per the plan, and we expect growth coming in that direction. On the ADC front, we are investing capital in both of our sites, NJ Bio, especially with customers now coming in more for conjugation. We have actually recently signed an arrangement, an agreement with a customer on end-to-end, linker, payload, and conjugation customer. So we are expanding our capacities on conjugation there in NJ Bio. As well as in our Nacharam site, we are also investing in an OEB6 suite. We are working with a large European-based partner to really work on a high-potent molecule there. So the investments are there to really add our capabilities and capacities, and we're thankful to the customer for the trust that they put in us. Overall, our guidance, remain, to the guidance that we shared, I think, last quarter, that we will maintain high 30s EBITDA this year. We are committed to deliver those numbers.
Okay, Mr. Sharma, you have reiterated that $1 billion revenue target by 2030 again. So given the current business mix shift, CapEx plans and demand trends, do you see that this target will be met ahead of its schedule, or will it require further inorganic moves as well?
So I think we'll be very excited if we can meet. I think internally management's endeavor is always to accelerate the growth and meet it as soon as possible. So there is a lot of things in play, and it's that is our commitment. That is what the team is focused on. We are expanding team. We are investing in people. As you saw, we announced the new CEO of the CDMO business. Recently, we are investing in commercial capabilities and individuals as well as, capacities. So, we remain optimistic to meet that target, and our endeavor will be to really, move fast and forward fast so that we can deliver those numbers to our shareholders faster. And again, there's a lot of things in pipeline that gives us confidence. However, while organically there is a lot of potential, we always keep looking for inorganic targets that meet our strategic rationale. And if you find the right type of targets, we'll be happy to make investments to acquire things.
Right. Mr. Sharma, also the second half of FY26 was expected to see sharp recovery. What's the outlook? Are you on track for a double-digit growth target for the full year?
So yeah, we don't share, very specific yearly details. As I said, our guidance is we are committed to $1 billion by 2030. And as a team, we are working on strengthening our relationship with customers, strengthening our capacities and capabilities, bringing in people to the team, and then working with a strong vision and focus to really deliver that target.
All right. Thank you so much, Mr. Sharma, for joining us today and helping us understand the outlook going forward in FY26. Great chatting with you. Hope to connect with you again. On that note, we'll let you go. All right, then, viewers, let's get started.